I think a lot of people follow the traditional route. Go to university, come out in debt, get a job, get a mortgage, try and pay off your mortgage, get married, have kids, hope you've got enough in your pension. And for previous generations, I think that's worked well. I'm a lot older than you. I'm kind of late 40s. I'm probably, I've broadly, to a large part of my life, I've followed that path, and so far it's been working okay for me. But I think for the generations to come, I don't think that approach will work, because the system now is in a place where doing the traditional things probably won't be enough to really protect your store of value, the wealth that you've created, to really make sure that you can grow that to sustain a future that you're hoping to achieve.
Yeah, it's super interesting when we see that Bitcoin actually broke that traditional model of 60-40 portfolios, or like having ETFs and all like that. I even was on that journey where I had stocks and I was like planning to go into real estate to diversify. And then came Bitcoin and I was like, okay, I have to go all in. I mean, that transition took some years, but so I think it continues to suck in the financial energy. And you said something really interesting in the preparation. You said, like, we have to look at the different age brackets of Bitcoiners and have different approaches. What do you mean with that?
Yeah, I think there's a lot of when you see things like stay humble, stack sats, it's a solid meme within the Bitcoin space, and it comes from the point of having a longer time horizon. Don't just seek quick gains to buy flash cars, etc. And I think for younger people, so I'm talking, maybe, for example, my daughter's 17, 18. As much as she's not really interested in Bitcoin, I try not to push it too hard, but at the moment she's not that interested. But for that kind of age group, putting a small amount aside regularly could help to create generational wealth in years to come. I think when you then get to someone in their maybe 30s with starting a family, they'll have so many other pressures on their financial, they'll have so many financial demands on the money that they earn, that it's probably harder to find money to put aside, because they've got to pay the mortgage, pay the electricity, childcare, whatever it may be. So the younger person might have less money available to them, but if they're still living at home and they don't have the outgoings, arguably they could potentially, tuck away more than someone in their 30s. You then get to someone in their maybe 40s, 50s. So someone like me, and I'm quite happy to share. I'm in the process of selling a buy-to-let that I had, because the interest rates on the mortgage are going up. The mortgage is expiring, and it just becomes uneconomical, especially with tax, to actually own the thing. And it's not a passive income, because when you have a month without a tenant, and when you have a boiler that needs replacing, all of these things are costs that eat away at the return you make. And I think my generation has the opportunity to divest in things like, if you're invested in bonds, if you've got an ISA that's investing in the stock market, I've got the potential, or my generation maybe more so, has got the potential to say, I'm not going to stay humble and stack sats. I'm going to make more radical changes and make bigger purchases, which is obviously something a teenager or an early teen can't do. But I think that solitary message of stay humble, stack sats, and just keep building up your stack, I think sometimes needs a little bit more nuance to it.
Yes, I mean, there's so much already in there. The passive income side, I sometimes get a little mad when people are, I have passive income. Like, what does this mean? There is no passive income. You have to build something up, and maybe it runs without you because you have built a management team around it, or you build something around that. And especially with real estate, I live in a fairly easy to manage small apartment, and I have problems probably every 4 months where I just make pictures of it and send it to my landlord, and then he goes ahead and fixes it. That's great because I can make a picture and send it to him, and he's responsible to fix it. So I know it's not passive. Yes, you can hire someone to do it, but then you have to manage the one that you're hiring, and then it's just a business. It's the same with any business. So seeing real estate as passive income is, I think, a foolish idea.
Well, I think the other thing with real estate, even if you ignore the buy to let investment side of it, I think particularly I'm in the UK. The UK mentality broadly is if you buy a house, that's a great. I mean, there's a lot of people still, their pension plan is their property, which is completely crazy because where are you going to live? Okay, you can downsize. If you're mortgage free and you downsize, you free up some equity from selling your property and buying a smaller property. So move from a 3-4 bedroom house to a 2-bedroom flat. But are you going to want to do that? And is that you're putting all your eggs in a property basket, whereas actually that's probably not the best thing for you to do.
And there are so many examples of where a neighborhood got bad because of politics, because of something else, and then you're losing. So even if you say, "Oh, a house is a safe investment," no, it's not. you have a lot of risks that you just don't aware of. And also, I think you mentioned it because of taxes. I've seen discussions in politics a lot, and taxes on real estate is one that usually comes up the quickest because they cannot move that property out of the country. They can move a company out of the country. They can move Bitcoin out of the country. They can move other things out of the country. But real estate is easy to tax because people mostly don't move out and take all of the sudden their real estate out, especially if they have built this running system with management team above it and stuff like that.
Yeah, and even with your own home, there's a lot of personal. The perception that people have of you is tied up in property for a lot of people. So people aspire to buy a bigger, nicer house with a nicer car on the drive and all of the traditional fiat mindset. Whereas Bitcoin, I think, does make you think less materialistically and with a longer time frame. And if you keep buying and aspiring to bigger houses, better cars, that tax element comes in again. I mean, again, I don't know the tax setup in every country, but generally in the UK, the bigger your house is, the more council tax you have to pay every month. You're still getting your bin collected. You're still getting police on the streets. You're still supporting, care homes for the elderly in your area, but you're paying twice as much as someone who's got a house that's half the size of yours. So all of those things are still entrenched in those decisions you're making that effectively are tying up so much of the money you're earning and meaning that you're having to seek promotions and pay rises just to keep that wheel turning.
It's super interesting. For me, when I look at accountants, I have an aunt that is actually an accountant, and she was in a company just for 2-3 months. and I talked with her, and she's like, "Oh, like that company looks so bad in the books." And she's like, "Hey, don't tell," but like I look at it and it's so bad. And then, fairly enough, half a year later, the company was bankrupt. So it's always interesting because I think accountants see a lot of bad management, see a lot of also personal finances, depending on if the accountant is doing it for companies or like for individuals and stuff like that. So I'm fairly certain that you probably have seen already some financial mistakes alongside in your career.
Yeah, I think as well, bringing it more to individuals rather than companies, I think it's not always mistakes that people make. I just think sometimes people don't realize the opportunities they've got to make better decisions. So, and I think I'll give you one example. I pay interest only on my mortgage. The reason I do that is because rather than paying off the loan, the mortgage loan, it allows me to put that money either into buying more Bitcoin or putting it into my pension when I get a tax benefit back from the government because I've contributed to my pension. So the traditional mindset is I've got a house worth £500,000. I want to pay off that £200,000 mortgage as quickly as I can. So that house is all mine. But actually, if the interest on that loan is 5%, then if you can do something with the money that you're paying off that £200,000 with, that is going to earn you more than 5%, surely, well, it stands to reason that's a better use of those funds. I did a quick, I'm not going to get bogged down in numbers, but I did a quick calculation. If you've got a £200,000 mortgage, which in the UK is a typical size of the mortgage, over 25 years at 5% interest, then you're paying £1,200 a month. Of that, £800 is just paying interest to the bank for their rewarding them for clicking a number in their spreadsheet and transferring that to you, and they're earning their £800 a month. £400 a month is going to paying off that £200,000 loan that you've got from them. But imagine if you could put £400 a month for 25 years into Bitcoin. I didn't even try and do a Michael Saylor and do the calculations on it, but it would be probably, it would go beyond millions probably. So it is a genuine choice I think people have, but it's a hard choice to make because all of traditional mindsets and finance says you need to pay off your mortgage. You need to pay off your mortgage. You don't want debt. But yeah, there are alternatives to that. And I think sometimes once someone has seen what Bitcoin is and what Bitcoin can do, there are probably more routes to you accessing more money within your current setup than you probably think you have.
There's an interesting topic in here because debt, I think, is within the Bitcoin community almost controversial, I discovered. And there's this group that says like, oh, there's good debt and bad debt. And then there's this group that says like, oh, like there's no place for debt in a Bitcoin world. How do you look at that?
I think you can be very purist and say in the future we don't want debt, we just want Bitcoin. I don't. I have some agreement with that view. However, the reality right now is fiat is being printed at a rate no one's ever seen. It's being devalued. You can borrow it relatively cheaply against the rate that we would all believe you would get as growth in Bitcoin over the same period of time. So for me personally, if I have debt against an asset like my home, I'm completely comfortable with that. I still believe my home will grow faster than the interest that I've got accruing against it. And it gives me more opportunities to do other things. I think if you're getting in debt to leverage up to buy Bitcoin or to buy fast cars, have holidays, in the hope that let's say someone says, I don't care, I'm going to put £10,000 on my credit card for a holiday because I've got an amount of Bitcoin here, and by the time I have to repay that in a year's time, the Bitcoin will be paying for it for me. That's completely the wrong mindset of what debt is. But my view is if you can manage it properly, if you've got the right mindset for how you're going to use that sensible level of debt against assets, not against just frivolous spending, to allow you to increase your holding in Bitcoin, then I think for the right person, that's a very positive thing to do.
Yeah, I also think so. I mean, we have the most famous example of Michael Saylor using the fiat. I always call it the fiat games to get more Bitcoin. What he does is probably not possible for any individual, but it opens up the possibility of like, okay, if you have a mortgage on your house, maybe maybe you can even buy Bitcoin with that. I've never got into that. How do you look at actually how's it called, loaning against the Bitcoin, no, borrowing against the Bitcoin?
Yeah, so just to go back to what you're saying about the mortgage, if let's say someone listening to this is in their 40s or whatever age they are, and they're thinking, well, I've paid off my mortgage and my house is worth, insert a number, it doesn't matter. That person could go to the bank and say, I would like to borrow against my property. They would give them a mortgage, and they can say, within reason, they can say, it's for house improvements or whatever, the bank won't be too worried because they'll be securing, let's make a number up, they'll be securing 50,000 euros against a €500,000 house and saying, that's fine. We're not worried. If you don't pay, we'll take your house and we'll get our 50,000 euros back. But that person could take the view that I'm going to take 50,000 as a mortgage against my property now. The payments every month will be relatively low, but it gives me an opportunity now to buy 50,000 euros worth of Bitcoin. Now, none of this is financial advice. Let's be really, really clear on that. This is not financial advice, but someone who has invested time, energy, and put research into understanding Bitcoin and thinking, I've got this asset, I've got this house, but I can't, I'd love to be able to divest some of this house to buy some Bitcoin. Things like that are open to them. It's just switching your mindset around slightly to think, well, how could I, as you said, Sailor is great at doing that. If you've got 4 chairs, you only need 1 chair, sell 3 chairs. It's a bit of an extreme example, but someone who has got assets, if they believe Bitcoin is a superior form of wealth generation and preservation, then they probably got more options than they think to try and access that.
I brought that meme up once on Twitter, but when I have been to Michael's house for the 100K party, and there are more than 10 shares that I counted.
I reckon he's probably got 2 yachts as well, but yeah.
But that's another discussion. So he's not selling all his shares. But that's a super interesting thing of like we can use that to buy Bitcoin. How do you look now at the other thing, the borrowing against the Bitcoin?
I think as a basic principle, it depends what you are going to use that money for. If you're in your 60s and you're going to use it for facilitating earlier retirement and thinking, well, I could sell my Bitcoin now because I need some money, but if I borrow against it and the Bitcoin keeps going up, like I believe it will, faster than the interest that I'm having to pay for the loan that I'm borrowing against it, it makes financial sense. If someone in their 20s is going to use leverage to borrow against their Bitcoin to buy more Bitcoin, to then leverage against their Bitcoin to buy more Bitcoin, and to get greedy with trying to just get more coins, it could be successful. If you did that 12 months ago, you'd be sitting on some nice gains now. But we all know how volatile Bitcoin has been and is likely to continue to be. So any kind of borrowing that has the ability to take those Bitcoin away from you is a risky strategy. And I think it's, for most people, it's probably best avoided.
It's the psychology behind holding and buying Bitcoin is really hard. I saw it with myself, and I saw it with a lot of other Bitcoiners. You're always trying to be fancy with it. You're like, okay, what if I buy that altcoin and get more Bitcoin in the bull run? What if I borrow against it? What if I get certain debts? Just sitting on your stack seems to be the hardest thing that humankind can do.
I think it's because most people are still maybe partly in disbelief about just doing that, just keeping hold of your Bitcoin and trying to build on the number of sats that you have is the best approach. And anything else is quite TradFi, is quite fiat mindset. The reason we don't all just keep hold of our cash is because we know it's being deflate. It's becoming less valuable over time because of money printing and inflation. So we have to buy stocks, buy shares, invest in property, whatever we're going to do with it. But Bitcoin doesn't need that. Bitcoin just needs to sit still, be left alone, and it will do its thing over time.
And it's so hard for people. There are a lot of Bitcoiners that even then try a weighted DCA and try to like buy more when it's lower and buy higher. I mean, it can be a really good strategy. But I found, especially now in the last like 1 to 2 years, it's so freeing if you just buy Bitcoin with the money that you have leftover. So like I'm maybe a special case because I'm 100% on Bitcoin, and I just buy Bitcoin with whatever I don't need, and now I also earn in Bitcoin, so I actually now have to sell some Bitcoin here and there, and just like buy the top forever and buy the low forever and buy also the medium things, whatever the price is, and just write that out and use Bitcoin basically as my savings vehicle, which is extremely freeing because now I can focus on what I want to do, and a lot of people haven't discovered that yet.